Last night, President-elect Donald Trump announced on Truth Social that he'll want to implement a 25% tariff on Canada and Mexico, and then he'll want to implement an additional 10% tariff on China. Honestly, in my opinion, yes, this could be inflationary. This is something that the Federal Reserve has to watch. That's partly why I think the Federal Reserve may want to slow the pace of interest rate cuts, as released in today's Fed meeting minutes. But to be honest, I think this is mostly Donald Trump doing like the art of the deal, trying to negotiate, trying to leverage the strong U.S. position because we import a lot of our goods from Canada and Mexico. So Mexico is already trying to have some conciliatory language to try to come to the table a little bit, or at least speak with Donald Trump. And look, just because you see these 25% tariffs for Canada and Mexico and an additional 10% for China doesn't mean necessarily that'll be actually be implemented. This is art of the deal kind of stuff. It's a starting number to at least get the conversation started. In my opinion, global markets sold off because of this, because other countries are worried that these tariffs might hit them, but the U.S. stock market today is doing better in comparison. But honestly, I think this is a little bit more towards political jockeying than economic jockeying. Trump really wants to lower the amount of migration and drugs coming into the U.S. So I think he's using the strength of the U.S. as a negotiating point in terms of leverage. Obviously, we'll have to see, as I said, if these tariffs get implemented. It's very likely they will not. They're just starting points. And then I want to talk a little bit about the crypto sell-off right now. Bitcoin almost hit 100,000 the other day, and then it briefly went under 92,000. I think this is healthy. Honestly, I did think Bitcoin would go above 100,000 in that run. I still think it will probably by the end of this year. But there was too much euphoria and enthusiasm of that happening. And there was a little bit too much leverage and risk being taken out and bets that would happen. A lot of investors were doing options trades and doing 2x leverage. What that means is people were betting with their investment in that their investment would be going up 2 times the magnitude of Bitcoin's price. And then when the price works against you, then you could get liquidated out of your positions and margin called. So we're seeing a little bit of deleveraging happening, and I think that's healthy before we continue the next leg of this bull run. And look, that also means, yes, there is temporarily more sellers than buyers. But look, in any Bitcoin and crypto bull run, there could be multiple 10, 20, and even 30% sell-offs, but it's still a bull run in my opinion. I think Bitcoin will still likely hit above 100,000 by year end. But right now, I think it's very healthy that we have a little bit of a deleveraging to take some excess froth and risk out of this market so that it could have its next leg higher in a healthier way, in my opinion.